story is going to be. With the month of May kind of wrapping up, I wanted to look back at this third halving, the third halving in Bitcoin, right? And this is the halving to the Bitcoin miner reward and the significance of Bitcoin moving into this fourth block reward era, right? Now, of course, leading up to the actual halving event, there was so many predictions that you could have seen out there. And those predictions ranged from minor capitulation to complete disaster of hash rate, price predictions of $500,000 and above, and everything in between, right? And a lot of this analysis that we've recently covered seemed to be focused around looking back at trends that followed the first and second halvings. And of course, there is some good legitimacy to that, right? The future does not echo the past, but it does rhyme, right? This is a common trope, and it is very, very true. Now, both events, the first and the second halving that we experienced previously in Bitcoin's history, saw Bitcoin's price skyrocket in the following 12 to 18 months after the respective halving event. But in the case of this third halving, which has just taken place earlier this month, it is said to be a halving unlike any that's come before it. I want to explore kind of this opinion on this by Paul LaHaviland, who wrote this Cointelegraph piece. He argues that this halving was more like the creation event behind the Bitcoin network, so the actual Genesis block, rather than the two previous halving events. So for those who are not aware, Satoshi Nakamoto famously embedded the Times January 3rd, 2009 lead story, Chancellor on the brink of second bailout for banks, into Bitcoin's Genesis block, right? This is the original Times article. This is the article that was referenced in the original Genesis block of Bitcoin. Now, this particular newspaper headline signaled a sign of the Financial Times that we are still currently in, that have actually gotten much worse, in my estimation. And the inventor of Bitcoin posting this to the Genesis block, I think, was signaling his own placement for this historical landmark, right? That on this date, a new monetary order is emerging, one which is intended to counter the existing central bank status quo and their their theories of modern monetary theory and endless money printing and quantitative easing and overall absorption of the wealth of Main Street into the financial sector and just terrible investment products that fleece the public, right? This is a point that we've repeated often on the show over the course of this latest halving event, right? That this halving event reminded us of Bitcoin's underlying principle of responsible monetary policy, right? The so-called Grayscale term, coined this term monetary hardening, right? And even though Bitcoin came to life 10 years ago, in the wake of the 2008 financial crisis, which, as you guys may or may not recall, was marked by unprecedented rescue efforts by central banks worldwide, Bitcoin's genesis was created during a time of financial crisis. But the two halvings, the very first two halvings that followed that, occurred during periods of relative stability, historically low interest rates, and bull market in equities. Right? Now, this third and latest halving, however, is different because it coincides with a new emerging economic crisis in the wake of the COVID pandemic, right? We found ourselves facing a monetary challenge far greater than what 2008 presented to us. We're seeing all of these high profile investors, the latest being Paul Tudor Jones, pointed out recently that $3.9 trillion, or the equivalent of about 6.6% of global economic output, has been printed by the central bank since February. This is completely unprecedented, right? And Tudor went on when he was talking. He talked. Tudor was talking in that newsletter, talking about that we are witnessing the greatest monetary inflation of all time, right? An expansion of every form of money, unlike anything the developed world has ever seen. And this takes us to earlier this month, right? Where the final block mined during the third block reward era happened to include a message much like the one Satoshi inserted into the very first block of Bitcoin, aka the Genesis block. And this reminds us that as much as times change, certain things remain the same, right? In this case, it's the central banks and the existing financial order that has managed to jeopardize the entire financial system of the globe under their stewardship, right? And as the F2 mining pool found that block number 630,000, it marked the end of the third halving era. And in that block, they inscribed the headline, New York Times, April 9th, 2020, with 2.3 T injection, Fed's plan far exceeds 2008 rescue. Just as much as Satoshi putting this reference in the Genesis block, F2 Mining Pool putting their reference in block 630,000 is a permanent timestamp. That marks the failings, the ongoing failings of central bank policy, right? And gives, a beautiful nod to Satoshi's Genesis block message, right? Now, the current block reward era positions Bitcoin's scarcity akin to gold in terms of stock to flow metrics. We've covered this quite a bit, right? The current rate of BTC creation is 6.25 every block. So that means it is going to take 56 years to replace every Bitcoin in circulation, right? Gold stock to flow ratio is 58.3. So as Bitcoin is undergoing yet another monetary hardening process, policy surrounding fiat currency has, in the opposite, loosened dramatically before our eyes, right? With, honestly, like every conversation that I have with traditional market guys, starting off with, I'm like, hey, are you guys bullish or bearish? And what do they say? They're like, well, it depends on how much more money the Fed injects into the monetary system. Like, are you guys crazy? Are you guys serious? It's not about technical analysis. It's not about fundamental analysis. It's not about the value of the stock. It's not about PE ratio. It's not about earnings. It's not about global fundamentals. It's not about war. It's not about poverty. It's about, well, it just depends on if the Fed prints some more money, man. Like if they print some more money, like we're definitely going up, but we're just kind of on the sidelines right now. Meanwhile, all you need to do is look at Main Street and see again and again and again, every single time this happens, almost every 10 years, billions disappear from pension funds, from 401ks. That is going to be you someday. If you're young right now, you need to remember this, right? Because for the last 100 years, let's just say last 50 years, the solution that was offered to citizens of most countries was, hey, listen, we've got these professional financial institutions. They're backed by the government. They work in league with a central bank, and you just give them your money. They will invest it responsibly, right? And when you retire, you can pull on that money, right? And this is what everybody should be doing. This is good for the economy. This is nice and safe. But guess what? Every 10 years when the market crashes, that's the first money to get fleeced. That's the first money to disappear. Billions stolen from pensions, billions gone from 401ks. The money is not there because Wall Street gambled with it and lost it. Right? And the Fed has stepped in to pay them back at the expense of the taxpayer over the next 50 years. It's a tax on the citizenry. It's a tax on your children that aren't born yet. But, it's totally fine, right? It's totally cool. Right now, we're faced with a situation which mimics the conditions of 2008 from which Bitcoin was born, right? This is a story that we covered on Breaking Bitcoin just the other week with the Federal Reserve Chairman, Jerome Powell, when he appeared on 60 Minutes on CBS earlier this month. And he was asked unequivocally by the host. The host said, is it fair to say you simply flooded the system, that is the monetary system, with cash? And Powell's answer was extremely telling, right? He said, yes. Yes, we did. That's another way to think about it. We did. There's no other way to think about it, right? We have entered Bitcoin's fourth block reward era, and it's taking place during a period of unprecedented expansion in the traditional monetary supply, a similar climate to the 50 Bitcoin block reward era that marked Bitcoin's first 4 years of existence and growth. Now, with an annual issuance rate of 1.8%, similar to that of gold, the third halving has cemented Bitcoin as a tradable asset capable of withstanding current and future inflationary pressures. Of course, Bitcoin was envisioned as a peer-to-peer electronic cash system. That narrative has, we just talked about this earlier, that narrative has not faded, right? That the narrative of Bitcoin as electronic peer-to-peer cash has not faded, right? We have massive improvements coming to Bitcoin. It is that the demand is so high and the security so robust, the network so robust that it is slightly inconvenient right now to utilize for small transfers. But you have the Lightning Network. You can utilize the Lightning Network. The Lightning Network will improve. Taproot, Snore signatures, all of the innovations that are going to come to the Bitcoin network are going to make it more robust, continue to make it more robust. And all we have to do is look at institutional demand and hoarding of Bitcoin by retail investors. It is playing such a larger role now in Bitcoin's trajectory than the I want to use this to pay for coffee narrative. The idea that the priority is letting people transact small nominal values is more important than onboarding the wealth of the world onto a more secure payment system and currency platform is ridiculous. You need to bootstrap the network by getting in the money. Okay, that makes the currency more stable and less volatile for the individuals that want to use it for value transaction, right? So right now, if I go to grandma and I'm like, hey, grandma, you should put all your savings into Bitcoin, right? It goes up and down 50%, 90% sometimes, but you should totally like just put your money in. It's totally going to be fine. And also, you should just utilize that to make payments, right? Because, you know, hey, one day your $20 will be 15 and then the other day it'll be 27. It'll be totally fine. Or I would go to something like institutional investors and say, hey, you guys should pull your money out of bank stocks and put it all into Bitcoin. And the more billions and billions and billions that goes into Bitcoin, the more volume, the more liquidity, the less volatile a currency is, right? And Bitcoin reaches that nice, safe, global safe haven asset approach. And then guess what? With all the innovations that are going to take place from here to there, that'll be immediately intuitive, robust, and easy for individuals to use that require it in places like third world countries. They're going to utilize it because it's safer than their current national currency, and they want to get paid in it. They want to send $10. They want to send $5. They want to pay for their cup of coffee. They want to pay for their meal. But that's not the primary point right now. And, you know, unfortunately, I just have to say this, right? The B-cashers, the altcoiners, the big blockers who advocate that Bitcoin has failed because transactions are expensive, you guys have the completely wrong mentality to win the battle against the traditional financial system. You're going to lose. And you don't understand incentives and the necessity to bootstrap the network with money. You got to get money into the system. Billions, trillions of dollars if you actually wanted to compete. And guess what? That's what we're doing. And all you have to do is look at the price and look at the market capitalization to see that for all the arguments and conversations, all the reasons why, you know, big blocks are better than Bitcoin, the big money players, the institutional investors don't agree with you. They don't. They don't. All right. One might imagine, however, that Satoshi maybe even foresaw this, right? This chancellor on the brink of the second bailout for banks message in the Genesis block hints at a currency immune from printing press debasement, right? Much like gold enjoys that same relative level of immunity from devaluation via overproduction, right? Bitcoin came up in a decade characterized by intervention through quantitative easing, along with the rescue efforts being undertaken to save the global economy this year. This third halving has arrived at a perfect time to make a compelling argument for Bitcoin as an investment grade supply limited asset that can withstand deteriorating conditions from endless stimulus and central bank intervention. The third halving event then, in my opinion, is more symbolic than the previous two, right? It has the potential to usher in a whole new financial order, much like its inventor intended over a decade ago. As usual, let me know your guys' thoughts and opinions.